Hello, fellow traders. Today we'll explore the emotional side of trading using the dramatic moves in Hood or Robin Hood. You'll learn how to recognize, manage, and master your emotions, even when the market goes wild. Today we're going to explore the emotional trading and how to master your mind when the market goes wild by Pajama Trader. Give this a like and subscribe. Let's get into it. The emotional roller coaster of trading. Trading is a psychological journey. When a stock like Hood's trends steadily higher and then accelerates into a parabolic move, emotions like excitement, fear, greed, and regret dominate. Volatility amplifies these feelings, making it hard to stay rational. Every trader knows the thrill of a breakout and the anxiety of a sudden drop. Hood's chart is a perfect roller coaster, showing how quickly sentiment can change pretty quickly. Hood, the real trade. So I bought this breakout after it held 51.61. Rode it all the way up to about 72. Wanted to take some profits right when this little drop. So I sold half and held it. Ran it all the way up to about 82.55. Kind of had me thinking I should sell the rest of it. So I sold a little bit more of it, and I'm still holding a small part of it into this run up. I believe that it's going to hold these upper levels and probably continue to head up towards the high 90s, probably before the end of the year. Emotional triggers at each stage. Entering during the steady uptrend brought some doubt and fear of the late entry. The breakout above 68.68 created euphoria and overconfidence. Volatility in the 70 to 80 range led to some anxiety and fear of losing gains. As the stock went parabolic, greed and the fear of missing out dominated. Exiting near the top resulted in some relief, also hinted of a regret, wondering even if there's even more gains possible. Every phase of this chart tied to a different emotion. Recognizing these feelings is the first step to not letting them control your decisions. Classic emotion traps in action. Buying late after a big move is driven by FOMO. Panic selling often happens at the first sign of a dip. Overtrading is a common response to every price swing in the volatile range. Bag holding leads to holding losers, hoping for a rebound. Regret and second guessing can haunt every decision, especially after a wild ride like Hood. These traps are universal. The Robin Hood chart shows how easy it is to fall into them, especially when emotions run high. How I mastered my mind. Having a written plan with a clear entry at 51.61 and a target to sell half above 80 provided structure. Position sizing kept it small enough to avoid panic. Automatic alerts were set for 68 and 80 and 85 to reduce screen watching and impulsive decisions. Journaling emotions and decisions at each stage helped identify the patterns and improve future discipline. Preparation is your best defense. A plan, smart position sizing, and journaling can keep your emotions in check, even with the wildest markets. The power of a trading journal. Every trade, reason, and emotion was tracked. Patterns emerged. Anxiety during the volatile consolidation. Regret after selling. These insights were used to refine future strategies and avoid repeating the same emotional mistakes. A journal is like a mirror for your trading psychology. It helps you see what you tend to do under pressure, and you can improve on it. Mindfulness and emotional control techniques. Taking breaks after big moves, practicing deep breathing before big decisions, and using reminders like stick to the plan were essential. Limiting screen time during wild swings prevented impulsive trades and helped maintain the perspective. Mindfulness isn't just for relaxation, it's a trading tool. Staying calm and present can be the difference between panic and profit. Turning volatility into opportunity. Volatility creates opportunity for the disciplined traders. The best entries happened early, not at the parabolic top. Sticking to the plan and managing emotions allowed gains to be captured while others were caught up in the frenzy. Wild markets are the biggest gains, and the biggest mistakes are made. Discipline and preparation turns chaos into opportunity. Key takeaways. Emotional control is your trading edge. The Robinhood or Hood chart shows you how wild markets can test your discipline. Having a plan, journaling your trades, and practicing mindfulness are essential for success. Wild markets are learning labs. Every emotional reaction is a chance to improve. Emotional control is your real edge in trading. The Robinhood trade was a roller coaster of anticipation, FOMO, anxiety, greed, and relief, all in one chart. By having a plan, journaling your trades, and practicing mindfulness, you can turn even the wildest markets into opportunities for growth and profit. Love to hear from you. What emotional challenges have you faced? You got any wild stories from your trades? Let's discuss and learn together. Thanks again for watching.